So the big question is this: how are investors like us, who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. Oh my God, today's the best day ever, guys. It's so exciting. So some crazy, awesome stuff just happened. For those who aren't following my mission to secure the 10 grand Google nonprofit ad credit, I have a meeting with the really awesome marketing teacher at Georgia Tech. I'm very fortunate because there are so many amazing professors at Tech. This one guy, he's been consulting like Fortune 500 companies. He's so awesome. So it's so great to be able to work with him on these ad campaigns for nonprofits, and then using them to expand, distribution of financial education. I'm so ridiculously excited to start working on that with him. So I was talking to him, just called him. I had an 11 o'clock meeting, and so the thing is, right, I've been following up with him for, I don't know, probably like 3, 4, 5 weeks. And pretty much I had no response, right? I've been sending a message after message, voicemail after voicemail, call after call, text after text, send him selfie videos, tons and tons of content, because this relationship is immediately worth $10,000, and in the next 2 to 6 years, it's probably worth a couple $100,000 in general marketing knowledge, which is awesome, right? So you got to put in the commitment and the time, so that whatever you're gonna get, the result that you want out of everything I do. And so he calls today, and he's like, dude, what the heck? Because I texted him, and we scheduled an appointment for today at 11, and it's like 11. So I was thought we were doing it on campus, but then he was like, nah, just give me a call. So I gave him a call, and then everything was amazing. He called me back, and he was like, hey, let's just do it on the phone. And so we did it on the phone, and now he's totally on board with it, which is awesome. I told him a little bit more about my background in personal finance and investing, and like what I want to do with the nonprofit credits, which is awesome. So excited about it. And so we're getting that all set up. It's so cool. We'll get it done by Google by the end of the day. It's amazing. So excited about that. And it all came because I kept persisting, because I kept going, right? I didn't have an ounce of hope from this guy. Nothing. He gave me like 2-word text responses. But because, the guy's got freaking valuable time. He's doing stuff, I went there yesterday because I haven't been hearing from him at all, just to make sure that we had like a date set, and like went to his office and he wasn't there, so I put a sticky note on his freaking door, because it matters, right? It's really important. It's going to change so many people's lives if we can get 9 to noon to more people, which I'm so ridiculously excited about, which is awesome. Oh my God, I'm so excited. It's amazing. So maybe if he listens to this, he'll know that he's super cool, which is awesome. Really cool. Anyway, so that was sales today. I also met with some clients for Easy Local. Super cool that we are gonna maybe close a dentist soon. That would be awesome. I would be so ridiculously excited to help a dentist get more clients. It's just so fun helping local businesses. It's awesome stuff. So today, you know what? Freaking awesome. I'll tell you what happened though. We got all the sales stuff out of the way, which is awesome. We got these guys closing, which is amazing. My favorite thing was something that stood out in that conversation with Michael, is he was like, he could count on one hand the number of students who actually like followed up with him, sent him messages, sent him videos, all that stuff that you do to follow up with people. Well, it was like 0 people, because nobody like actually cares, and it's berserk because like some of these professors, this guy's amazing, right? He's done so ridiculously much. Just like any kind of relationship with him is insanely valuable, which is awesome, so it's so crazy to think that like there are a whole bunch of people who just don't like take advantage of the full resources around them, which is crazy. And sometimes there's like a limit on time, which makes sense, but like you have to weigh the trade-off of this guy is insane, right? I mean, Michael, he's crazy. Years and years, decades of experience in marketing, and so valuable for the help I need right now. It's like ridiculous. And I mean, you got to think that like at least some other people are doing stuff, which is cool. And it means is there's just so many people, and they just don't even focus on it. They think, oh, don't start, just gotta get through school. But it's like, dude, there's some of the coolest people in the whole world here, which is just so awesome. It's amazing. I'm really lucky to be able to take advantage of that. And I want to push you, right? Like if you're in an environment where you're around super high achievers or really crazy experienced people, get out there and just do stuff with them and like stay consistent with it, right? You don't take a break, you don't stop, you just keep going hard and you keep meeting people and you keep going with them. And even if you only have 1 out of 10 people, like that's 1 out of 10 people. That's awesome, right? Oh my God, really cool stuff there. The net. That scares me now. That was pretty cool today, so I'm not falling again. Oh my God, so fun. Alright, cool. So, thanks guys. I'll tell you all I was doing some recording this morning for the super cool thing of Grow Rich series. I'm so excited about that. That will change my life, to change my life. I'm so ridiculously excited to get that training done. And after that, I started trading 9 to noon, which was really lucky because like I finished at 9:30, and I didn't have time to pre-market screen. I just looked at like one stock, and that one stock had like a 75% pre-market gain, and the volume was like 270,000 shares. It was awesome. Oh my God. So it opens up, and they have this ginormous drop. Like it was like a little U drop down below the VWAP, and then it curves back up, goes through the 9 exponential, goes through the 20, and then hits the VWAP, crushes it, and then actually breaks into new highs. And I swear, dude, I was so sketched out on it because the thing was at like $1.80, and I'm looking at an entry point at like $2, right? $2 solid entry point based on the $2 price point was above the VWAP. But I also saw it as sort of an ABCD setup continuation from the pre-market because there was this ginormous pre-market gain. So what happened was I got through that, and this crazy thing happened where it like the 1 minute candle went up like 15% in like 12 seconds. It was like insane. So I guess I'm freaking out, dude, because I don't know what's going on here. I don't know if these guys are going to crash, they're going to reverse, what they're going to do. Because they're over the VWAP, but it's such a high level of resistance based off all the moving averages and the extremely fast price movement with a relatively small amount of volume to back it up. It was so crazy. So I leave it, I'm freaking out, and then like 2 minutes later, they're going up another 20%. They go from $2 on a bottom reversal on a cup setup off the VWAP to like 260, right? And my price target on it was 264 with a downside of 20 cents, so like a 3-to-1 risk reward. And they hit 264, and then like they get there instantly. It was crazy. And then they get circuit breaker halted, and I'm like, dude, holy crap! They went up so much, and then they get circuit breaker, right? Because it was outside of the first 15 minutes of trading. If you guys read the book, I think it's like chapter 20. I talk about how circuit breakers work. So what happened was the circuit breaker was outside of the first 15 minutes of trading, so it was in the standard interval instead of the double interval, and the double interval, of course, being inside the first 15 minutes of trading. And it was just a normal stock, not really a special security. So it was in the normal range limits. So it gets frozen for moving like 15% in like 5 minutes, which was just crazy. It was like 20. It was crazy. So after it gets circuit breaker, and I'm like, okay, cool, dude. Like, I guess I missed that. That kind of sucks because they just went through my price target so fast, and I was like freaking out. I was like, what are you supposed to do here? Because the goal with it would have been like a gradual grow and a gradual move up. And the gradual move up, the point with that would be to see the stock go up slowly, and then you enter it on a curve on the C, and then it goes through the D. But what these guys did was ridiculous, and it's really risky, and that's why I want to talk about it, is because their C went straight into a D. It just went straight up from the little low. So it had this huge initial morning run up and pre-market run up, but then it kind of dipped down and was consolidating right around the VWAP. And so what happened was, after it started to consolidate, I was like, okay, this could be a nice setup. But then the C, it just went straight to that new high, made a brand new high a day, like within the span of 1 or 2 minutes. So that's like 2 candlesticks, and that's really, really risky, because the other day I got messed up on a trade like that, because these guys, they did that and then they just had to, I got in on it real quick, and they had an instant reversal, which sucks. And that's just kind of what happens when you have new high days, because those are still going to act as resistances that need to be broken through on the daily level. So I kind of wussed out on that trade, which sucks. It was a really, oh man, I feel bad about it, but at the same time, I don't know, it was really, really crazy. So what happens is, after the circuit breaker, they open back up, and then they drop a little bit, because that's usually stocks will drop after they get opened up after a halt. It was like maybe 10% down, but then they came right back up, and now they're up like 40%. Like, that's so cool. Oh my god, they're like 270, 75, I think, is what they hit. They hit this crazy high price, and it was awesome. If I would have been in the trade, I would have been awesome. But it's really, really fun just to trade the markets and to see that crap happen. I don't know. I couldn't short it because I'm trading with Robinhood right now, so you can't short, and you can't trade put options on that security, which is a shame. But what are you gonna do, right? I was really surprised at how high it went, because I seriously was hitting those price targets. I didn't think it would get that high, but it really impressed me, and it showed a whole ton of momentum on that ABCD setup, which is super cool. It's awesome stuff. And you just got to get in the trade. And also, when you hit your price target, sometimes if you see that there's enough momentum, specifically if you notice that there's like a circuit breaker, which is a signal of just ridiculously high volatility, a lot of times you can use that to take an indication that you should probably sell like half of a position instead of an entire position, which would have worked out pretty freaking well in that situation, since after it hit the price target for the ABCD, it went up another 20-30%. But hey, just a really amazing example of a ridiculously awesome stock trade this morning. So excited about it. So hey, that was so cool. Yeah. So sweet. I did make a trade today. It was awesome. It was on TQN, I think. Yeah, that was probably the ticker. Might have been TNQ, one or the other. And they were the second gapper today, right beneath. I think that stock was HDSI. Maybe not. We'll see. I don't know. It's on Thinkorswim. So I was trading those guys, and so I traded this one. This one was actually really cool. It was an interior Bollinger Band W setup combined with an inverse head and shoulder setup on the 1 minute chart, which was awesome. It was like a 60-cent stock. So the volatility was about 3 cents up, 3 cents down for that W setup. So I got in right at the neck resistance line on the actual the neckline for the inverse head and shoulder setup, which was also the top of the W band. So that was cool. It was a nice little double setup there. Really clear entry point. And then I was lucky I had enough time to research the float and make sure it was a good stock, which was cool. You want to see a lower float on those 9 to noon trades for sure. This stock in particular, that was for about 20 million shares, which is awesome. Pretty much everything, usually lower is better. I kind of max out around a couple 100 million shares. It just depends on your position size, but that float is seriously going to impact the volatility. And that's why I talk about it so much in noon, because it's super important. So yeah, cool, right? Oh man, it's so much fun. I love it. So, I want to crash. Oh, I didn't crash. Yeah! Oh my god, that's awesome. So, anyway, I enter on the inverse head and shoulders neck grind. Oh, and get this, right? On that ABCD setup I was talking about on HCSI, right? The setup was based on the ABCD, and my target was based on the ABCD. Like I said, it pulled back off of the top of the first movement, and after it pulled back, it just bounced right back up and kept going up. But what was really interesting, and actually made me think the whole lot, this is something you should seriously take away from this episode, is the stock reversed at 53, which was my price target was 260. Whoa, my price target was 260 based on my original calculations for the ABCD setup. And usually after a first trade, I'll double check my price target to make sure everything looks good, because it'll take a couple of minutes, 5 minutes to make the trade, which is super cool. But I didn't get in this trade, and then I was doing it. But what was really interesting is the stock at like 256, and there's no secret. If that stock peaked at 256 and then just went down for the rest of the day, like it does most of the time, when it's not ridiculously high momentum or obviously some sort of circuit breaker, usually it'll kind of peak off the ABCD, and then you have to kind of wait and see what it does, and sometimes it just drops off for the rest of the day, which is why I always use that ABCD price target, which I talked about in chapter 25, because that price target, oh god, is extremely, extremely, extremely reliable, and it's going to get you a majority of your profits locked in, which is awesome. This one, again, was a little different just because it got circuit breaker, so extremely, extremely high momentum. Usually, I would tell most of, if not all, of my position on an ABCD trade at the top of the D, as predicted by the run-up, added at the top of the run-up of the A, which again, it's if you need a picture of that, it's in the book, but basically you're just looking at the initial run-up and adding it to the top of the A before it consolidates and then goes back up again to complete the D on the ABCD setup. Really, really, really powerful tool right there. So, with that said, and I've explained it, I think, in other podcast episodes, but like I said, it's easier to see in a picture form. So, yeah, that's why I wrote a book, So, with my price target at 260, it did not hit 260. It hit 257, I think is what it hit. So it would not have filled me if that was my sell target, and I would have gotten screwed if it didn't keep going up. And then I went back and I looked at, oh gosh, what in the world? So I went back and I looked at the initial A run up again, because I was like, well, what did I do wrong here, I wanted to know what exactly was up. So I went and I looked at it, and I realized that originally 260 made sense based on the actual the candle wicks. They said 260, but if you base your analysis of the initial right run up on the A, on your left, thanks man. If you base your analysis on the candlestick bodies, on the bodies of the candles, the bodies were just a little bit fitted together, so it was actually about a 253 target based on a 9% movement in the initial run-up based on the candlestick bodies, which I thought was amazing, because 253 is really, really good, considering that the max was 256, 257. I don't know. That was a while. It was a couple hours ago, but it was very, 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 very close to the peak for the day, which is the whole point of using ABCD to predict that maximum price target. So, with that said, I realized that it probably makes a whole lot more sense to actually use the body of the candlestick on the ABCD setup to predict your price target, rather than the edge of the wicks, because the edge of the wicks will give you a wider price range, which will give you a higher price target. And in all reality, these are pretty, aggressive trades, and they move quick. So if you are, even at chance, that's not a good idea, right? So you want to have that set target, and I would rather be just a little bit more conservative, still lock in, 2 to 1 risk reward, 3 to 1 risk reward ratio based on ABCD type, and lose just a couple of cents on the top, rather than risk, getting screwed and having worse consistency, and then, in all, essence, losing more trades, because, well, not losing, but you're still essentially, that stock's going up 20, 30, 40%. And on the initial run up, it was a solid 20%. You're looking at the difference between 20% gain versus 21% gain. So it's a very marginal difference, but it protects you against the downside of going from 20% to 15%, which is that's a pretty significant change, right? So it's just thinking about the risk to reward ratios that you want to play. I usually strive for 3 to 1 risk reward, which is just, if you can make, a bunch of trades and only be right a third of the time, even worse sometimes, just depends, and you'll still crush it. So that's why I'm pretty hyped about that kind of ratio, which is just awesome. I love it. because it lets me trade aggressively, lets me trade well, and it also stops me. Today I was a little hesitant, which was a shame. I should have probably got in on that trade quicker, but like I said, I just didn't get in on it. I didn't feel it, and sometimes you gotta trust yourself, you gotta trust your gut, and it'll stop you to learn. But it'll also be good for you if in all reality you probably shouldn't be going too hard on a trade that's actually not that good in the long run. You always want to trade, consistently. So super cool principles and important things to realize there that come through experience. You just kind of have to learn it through time. But hey, I hope you guys can take what I just said and unwind it and use it to actually make a bunch of bank, because that's some pretty serious, awesome stuff. I just kind of it's really cool. If you can use that, it's a much more consistent way to trade than ABC stuff. So, said, on to the trade that I made today that actually made money, which was awesome. We made about 3.4% today. And I'll tell you what, guys, if the market goes up 1% and I can make 3, I'll tell you, that's a good day. I love it, I'll take it. So 3.4% today on TQN, the share was ticker. They were Bollinger W, all that awesome stuff. It was cool because, the trade is something that I think only comes through time if you really want to take advantage of it. And that's why I want to give you guys a short time to be able to take advantage of it. They break through the top of the inverse head and shoulders setup, and also I guess the Bollinger Bands for the VWAP, for the W setup, and I get in right before they break out, which was awesome. You always have to take the risk on the edge if you want to make the most profit, which obviously you could have done better if you were timing it lower, but it's just too risky. So I buy in on the neckline, at least for 9 to noon trades. Usually it just depends on how good the setup is. This one, like I said, is a little bit more of a wish-wash between the head and shoulders and the W setup. So because it just made more sense to let it play out and make sure it was significant. So I got in at like 64 cents, a whole bunch of shares, and then it went up and it broke, and I was looking for it to get to 66 cents based on the height of the head versus the shoulder line. The difference between those two was about 2 cents. So you would add, the minimum head to the shoulder line, 2 cents to the actual shoulder line to get 66 cents, which is what I was going for, which is awesome. But what happened is after it broke, something really cool happened. Is the stock actually it went up, it started going up, it was doing exactly what it was supposed to do, and then it started to slow down a little bit, and I was like, okay. Remember, in this time frame, we're looking at about 5 to 7 1-minute candles from entry to exit. In this trade, I think it was about 5. So what happened was the guy showed up, and they got everything going, got everything awesome. It was so cool. But what's really interesting is that they started to slow down, right? And they started to slow down, and they started to kind of form a little bit of a 1-minute setup on the like a wedge setup, right? So they were consuming each other, they were engulfing each other, and the setup, just wasn't very, it was just slowing down, right? And I'll tell you what, guys, you have to learn how to read momentum. That's one of the toughest things for new traders to do, and it's totally cool. That one is it's all based on the speed of price and the volume traded. So the volume was going down and the speed was going down. So both of those are serious problems for that trade, because volume means that it's probably going to start to move pretty quickly soon, and then consolidating prices like that, especially after a run-up of a pretty sizable run-up compared to the actual underlying price movement of the stock. Granted, it wasn't a huge percent move, but for the trading range of the stock, and especially for the risk to reward ratio, it was a pretty sizable move. You're risking, probably 1 unit for 4 units of gain on that trade, which was really good. And then, like I said, 3.5%, 4%. 4% is a lot for people with 100-gram portfolio. So hey, cool stuff there. And so it started to slow down. It started to slow. And I realized, this trade's about to crush, man. So, did I bring food? Oh, I should have brought food. Oh well, it's okay. So I set that up, and then they started consolidating, and slower and slower and slower. They got slower and slower and slower. So it like 6370, 6380, just based on the actual underlying very, very shifts in price. But like for a cheap stock, it makes sense to go at 3 or 4 decimal places. So they were going, and they were slowing and slowing. So I realized, look, dude, this thing, it should go higher, but if it's not going to go higher, it's not going to go higher. You got to trust that the market judges it, and the market wasn't going to let it go any higher. So it chills out, slows down, and the thing, it just slows and slows and slows. And so eventually, I'm like, all right, I'm out. I sell it, like I said, 63, like 80, something like that, and for trades like that, it's hard to judge the price based on the chart, so I just did a market sell because you can't really tell like what the price is. The charts, especially with TD, they'll only go to 2 decimal points. So at least for some stocks that are like penny stocks, they'll totally go cheaper. It just depends on the market. I think that one was OTC, so I don't really know why it didn't go a little more accurately, but hey, what are you gonna do? So anyway, they get set up, and what was really, really interesting is I get out, and after I get out, these guys, I'm telling you, like they just, that was their peak, right? And after that, they just started consolidating down and down and down, and they started moving back down, because what happened was that the momentum just ran out, and these guys were out of steam. And when they're out of steam, you got to get out of the trade and take your profits. You can't be greedy. And so that's what I did. So hey, guys, make sure that even when you have solid price targets, and maybe even price targets based on technical analysis, it's still important to consider the underlying momentum of 9 to noon trades. With medium-term trades, you can usually just kind of like let them go, and they'll usually do your thing because they have more time to work it out. And momentum with those trades isn't a huge deal because you've got way more people in the market for it. Especially over a larger period of time. With 9 to noon trades, it's a very, very small subset of financial traders in the market for it. So it's got to move quick or people get out. And especially with that one, it went from about 1 million in traded volume when I entered the trade to about 4.4 million shares traded. So you have to understand, how it's going to grow. And then I think at the end of the day, it was a little bit higher, but there's still that same fundamental limit of, there's not a bajillion people trading this stock. Because, it's like, I wonder, can I do? Oh my gosh, I can. That's awesome. You just got to remember how people are trading the stock. And if the momentum isn't there, ouch. If the momentum isn't there, then, that's not your trade. You got to get out of it, and you got to take your profits. So that's what happened, and it just died down for the rest of the day. So, hey, take this knowledge, take this information, freaking take advantage of it. Go out there, use it, crush it. And if people tell you that you got to wait for a trade, sometimes you just gotta wait for a trade. All right, guys, thanks so much. Have an amazing day. I'll see you later. Bye. Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets we use to double our portfolios every 2 years and make upwards of 10% per trade daily.